Hello, traders. Welcome to our live stream at TradeGATEHub.com. You could also join us in the chat room. Both Mike and I and several other members have posted some pretty good ideas this morning. I want to start off with saying that we might have light volume today because there's a holiday in the Caymans. Does anyone know what the holiday is in the Cayman Islands today? I think it's, I think they celebrate Tax Remembrance Day. Is that correct, you guys? Tax Remembrance Day? All right. All kidding aside, I know that the metals really were the spotlight of what happened last week, but you know, I'm always looking under the hood at the engine to see how things are running, to see if we're going to throw a rod or anything. And, you know, I look at this weekly candle in TLT, which is a proxy for 20, 30-year paper bonds. And I'd call that a pretty negative close. I do expect follow through. In fact, I do believe that by year end, even if we have a little intermittent pullback to 155, that last week was also pivotal in the 10-year yield. And by year end, I'm looking for 2%. So you're going to have to look at the market through the prism of yields rising for the next 6 weeks, up towards 2. That's my target. And, you know, it's all about yields. Yields represent maybe some competition for certain commodity markets. So I just wanted you to be aware of this. I think that what we had going on in the bonds since the spring was simply a bear market rally that corrected the big decline that actually took out the COVID low. And I think we're going to take out this 139 level. Objectives could be, you know, under the 130 handle. And that should accompany about 2% 10-year yields. If the leverage of futures frightens you and it's not your thing, there are ETFs that you can participate in that will take advantage of rates and yields moving higher. Here's TBT. So TBT had a nice week. I think it could be long. Always know where you're wrong, and always have your risks defined before you enter. You know, that's a lot of things that people don't even have covered. Before you get into a trade, you have to know why. So perhaps I'm keying off what happened as far as a reversal week or what I'm seeing in the 10-year. I know what the contingency is, and this is a weekly candle. So, you know, I'll risk last week's low. Yeah, it could take out last week's low and then skyrocket. But, you know, the only thing we could control in the market is not targets, is not how fast or slow things occur. The only thing we can manage and have control over is risk. And even sometimes in certain markets, you can't control it to the penny because markets could gap your defined risk stop. That happens more in equities than it does in markets that trade 24/6. So this is my view on interest rates. I think we should take out this high. So there could be pretty good potential. Maybe we could rally up towards the 200-week moving average. Then I expect rates to fall, but that's down the road, and you know that could be a risk-off event. So now I want to cover what happened in metals last week, and we're getting a pullback here. So here's the gold. Here's your breakout. You know, we did rally over $100, right, from the Fed meeting. Actually got up to 1870.69 right here. So the title of this video is how to position trade gold in the light of that yields may be headed higher. And let's even take the yields out of the equation. And this is just money management, just like defining your risk. So if you're long gold and, you know, I don't know where you bought it, maybe you waited for the breakout. Even if you waited for the breakout, you should be taking partial profits here. Okay, if you're long, you should be taking partial profits. You should be moving up your sell stops to back under the breakout. And if you're flat and you're conservative, then I would just be patient and wait for the pullback to the breakout. I think that if you're patient, that's going to happen. You know, you're only talking about a little over $30 from here. And this is going to be important. So you wait and buy it. And then if we close under, say, 1820, when you're paying 30 or so, and we close, say, 1815, that would negate the breakout. And that would mean to abandon all long positions, even the ones that you tried here, and then start to work the short side. So if you're an aggressive trader, you could look for shorts here. We may have already put in this peak. I didn't see this morning. This took out Sunday night's high. So this very well could have been it. You could, put a short on and risk the highs over 1871. I'd give it more tolerance. I'd go 75 or 80, risk $10, looking for a pullback to the breakdown. Silver is actually much weaker than gold, giving up plenty. So, I think you could be patient for the silver as well. Maybe what we're going to do is we're going to get another test of the right shoulder here. And I do think a lot of it's going to have to do with yields, going to have to do with the fact that the dollar is still resilient and yields will create some competition. And even if that wasn't a factor, after, that kind of run in gold and silver over, $2.50, why can't we pull back 1.25? And I actually know some eliticians looking for this again, but I'm not going to short the silver because it has a better longer term wave structure. Although it may pay bigger, I'm still going to stick with this gold short. Look at all the confluence I have here at 1827, 1830. So this is going to be a good place to, I really think it's going to be a magnet, and we're going to see this level tested. So I want to move over to oil. Guys know I've been bearish for a while, so the Caymans aren't the only thing on holiday. It looks like the WTI bulls are on holiday, or maybe they're getting ready to, take a vacation in mass. And I think we're going to 76. This is where I'm looking to book it. I thought we could go to 72, but I'm not calling this the top, just a top. I think we'll make new highs in crude. So, I've been working the short side since all the way back here. It's been a meat grinder, but I've done okay on it. There's every once in a while, there's been, a few windfall candles, but for the most part, every break, you could tell a bull market when it doesn't give it up easy and it gets it back easier. So I'm just shortening. Earlier I was thinking 72, maybe it'll go there, but I'm comfortable enough to stay short, but I'm not going to be as aggressive about a target. And you know what Bernard Baruch said? Is it Remembrance Day? No, Tax Remembrance Day. Not just remembrance. What are you going to do? Remember everything on that one day? Okay. So that's my take on oil. Dollar, I don't think it's done, due to pull back a little bit. Maybe we pull back towards, 94.5, this breakout or so. But I don't think it's done. As I said, the battleground is up here between 96 and 97.5. So, if I'm right about yields, I can't see that hurting the dollar, right? So higher yields will be supportive for the dollar into year end too. And then we're going to take a look at maybe a new paradigm setting up that, this could end up being the shorting opportunity of the next few years, because, the whole world was bearish a dollar coming into January of this year. And now they've had a year of being squeezed, right? Maybe even converted. So, everyone said you just have to be short the dollar. You just had every rally, short the dollar, short the dollar. And they, they made some money counter trend, but long the dollar has been the way to go. That's with the sale at your back. I also like the song by Bob Seger, Against the Wind. I'm older now, but I'm still running against the wind. Who likes that song in the chat room? Bob Seger, play it. It's kind of a trader song. What do you think, Michael? Against the Wind, Bob Seger. Currency wise, I'd be looking to sell Aussie. Kind of sets up with, I don't think Aussie's going to take out last week's highs. It's 100 pips. So I'd sell a 2-3 day rally, maybe 74-ish, 74.40. I'd sell the Aussie. I think it's going to break down. Okay, during the last wave in the dollar, 72 to 78. It's going to give you sub 70 on the Aussie. So I like that one too. Here's something that people, there was a lot of excitement. I actually did call the lows here in Euro pound. Got out here before the BOE disappointed by not tightening. That's when you had this action. But I look at what's happening now. Forget the past, right? Press forward in your race. Run your race. You have to press forward. You don't look back. So some type of ABC developing here. I may start to accumulate right here at the 50% level down to 61.8. Because when you look at the EG, look at what contained it. I think it's pretty cool when a moving average, and this is the 200s, looks like a trend line. It's mimicking a trend line. And if we get breakouts over these highs over 85.80, we had a 200 pip move here. Why can't we rally to 87.80 to 88, which was a big level on the way down? See it right here. 87, 88.5 was a big breakdown. So all we'd be doing is retracing this, whatever reversal formation it was, and retracing back towards that 200 week moving average. So looking to buy a break there. Everyone understand the reasoning why? Okay, not just what I'm doing, but the whys behind what I'm doing. And when it comes to gold, right now it looks like I missed it. Maybe gold, isn't going to make a new high, but I'm going to be patient and wait for a new high. And one of the reasons I'm going to do it is because you're starting to get pretty glaring divergences here. At one point, it looked pretty much like a 3 drive last night. And then all they did was go looking for stops, sold it off pretty good. So, we already have the makings of a reversal day. Just look at the daily. See, so we have a little red candle. So, they may try and shop for stops again up there, but I see nothing wrong because your defined risk. It's about 15 bucks, looking for 30 or so. Silver, take a look at that. It's even a more negative reversal day. You sure know where you're wrong in silver, because we're on the verge of breaking out over the 50-day. What bothers me a little bit about silver, and I love it long term, is that this is a neckline. It should have been a big breakout, and it couldn't do it Thursday, but it was able to do it. Wednesday it couldn't do it on the Fed, but then it did it Thursday, and it held it Friday, and now we're on the verge of giving up this breakout at 25. So to me, this is somewhat of a negative signal, and we'll see, what kind of pullback we get in silver. I think it'll probably be larger, but I'm going to maintain my discipline because the gold silver ratio, even though we're bouncing today, is very much in favor of silver. In fact, if you look at the daily on the gold silver ratio, even though it's holding right here, this kind of has the look of a head and shoulders top. Maybe we get another bounce up here, but this is targeting back towards the lows in the gold silver ratio. So very weak rally, maybe we're headed down again. So I'll maintain my discipline of going with this trend. If we're going down, it means that when you're bearish metals, you short strength in gold, and when you're bullish metals, when we're going down, you buy weakness in silver. Just a quick look at S&Ps. I'm looking for new highs by year end, and we had this little pullback. We could still have one more pullback, and to remember the expression of Bears feast on Thanksgiving. So we're about a week and a half away from Thanksgiving. So why can't we have in general, like some down markets, some liquidation in oil, a little A, B, C in S&Ps into Thanksgiving, and then blow off in December and early January. Same type of look in NASDAQ. Looks like a failing rally, could be a failing rally and still be corrective of it being ABC for A, ABC for B, and now we get a C. And I thought a natural place for the NASDAQ to pull back to would be 15.7, which if I could move myself out of the way, were the old highs before we had a nice correction. Here's the 15.7 right up here. So, why can't it pull back there, or 15.8, and then blast again? So, the high conviction call is higher rates and some type of at least counter trend move in the metals, and looking to be a buyer in euro pound around the 50 to 61.8% retrace, and being long TBT and being patient in silver, that you're going to have a chance to buy it, because I know how many people had FOMO here. I was one of them, but I surrendered my mouse to Mrs. Pinkert. I know you guys have seen me, but I'll do this. Mrs. Pinkert, please take my mouse away from me because I have FOMO. So that's a good reason to get married. You have someone to hand your mouse over to. We have a great week ahead of you here on TradeGATEHub. Tomorrow I get together with my trading warrior brother Michael, and we go over some things in individual equities. Also remember, as crude continues to try to break, that I'm not going to wait for this red line around 76. If you see it, go to the door on something. Michael will be with us, and we'll talk about what's happening in NASDAQ and some of the shares, low floaters. Michael watches so much stuff. I mean, it's amazing the capacity he has. I'm still watching stuff, and I'm like a senior citizen watching Apple and Microsoft and FANGs, because he follows things that can double the range in a day, and volume increases that are dramatic. So good hunting the rest of the day. I'll see you tomorrow. Big call is that I believe rates yields are headed to 2%. I think that favors the dollar into that event and could possibly cause a decent correction in the metals. And perhaps we get a C wave down into Thanksgiving on the market, and then you buy it for Santa Claus to feast on Christmas. So good hunting, and remember, don't just count your pips, count your blessings. I hope we're adding value to what you're trying to accomplish. I know I try and have a little fun here and make light of it. It's a very difficult endeavor. You really have to do what you can to take the pressure off you, and the money management technique of taking partial profits and moving your stop to break even and de-risking a trade as soon as possible will give you the longevity to be in better shape than me after 40 years of doing this. Okay? Have a great day, everyone. Adios.